We're absolutely at the peak of the market for detached prices. If anybody that's watching this video wants to put some inventory on the market, please let me know, because we don't have a whole heck of a lot of it and I'd love to sell it for you right now. We have the lowest number of new listings that has hit the market in Toronto in a decade. And it's not like by 0.5%. It's by 5% to the next closest, which was 2011.
This is crazy. I mean, I look at this and I go like, if it continues to go more to the left, like just to have a house on the market is going to be like you're auctioning off like Michael Jordan's sneakers from like his last NBA game or something. Like it's going to be like so iconic.
Now, this is the most important slide for investors or renters in this entire presentation.
Hey everybody, it's Kory MacKinnon. I'm taking over the channel this week, and today we have Emma Pace from the GTA. Looking forward to seeing all kinds of great stats and Emma's crystal ball predictions for the month. So Emma, it's great to see you again. Too bad it's virtual because usually we're meeting in person.
Yeah.
But either way, it's great to see you. I'm really looking forward to today's episode.
Absolutely. It's nice to see a familiar face on here. I like to see it change up, so it's good to see you, Kory.
No worries.
All right, let's dive right into the slides here. I'll just share my screen real quick with you.
Sure.
So it's been a relatively interesting month, I think, for Toronto here. I'll just get right into the slide here. So, every month we go over kind of like the month-over-month trends. I think the reason why I like to track that versus year over year is obviously last year was a little bit wild in comparison to what we see. So I like to track it month over month for my clients actively to give them a more accurate snapshot of what's happening on kind of a micro data type of basis. So from October to September, I think it's very clear in real estate to see a difference between seasonality, right? Summer to fall, fall to winter. But sometimes when we get to like these interseasonal months, it can be a little bit harder to differentiate kind of what's going on. And so we're there kind of mid-fall market right now. I mean, we're recording this in November, but of course, with real estate statistics, they always, they come out kind of a month later. So for condos this month, we didn't see, I've highlighted here in yellow both condo prices and detached prices. We saw condos pull back a little bit, just over 0.5%. We saw detached prices increase just shy of 0.5%. So to me, that's not a drastic enough of a move. I consider that relatively flat, which is why I kept that in kind of the yellow territory. But the biggest mover for sure in the Toronto market were condo towns last month. Almost 6.5% jump month over month. So September, we saw the average price point just shy of 840 there, and we are just shy of 900K now in a month. So that was absolutely our biggest, most shocking statistics from a price growth perspective. And then semis as well, we saw just shy of 1.5% there in terms of growth. So if we're looking at average price points in Toronto right now, condos around 740, we'll say 750-ish if you're looking for a condo. Condo towns just shy of 900K. Semis just over 1.3, and then detached are hovering just below 1.8. So we're absolutely at the peak of the market for detached prices. So yeah, if you're looking at kind of average price points to get in there under $1 million, you're looking at condos or condo townhouses. If you're looking at getting into a semi or detached in Toronto right now, you're looking at a decent chunk of change over $1 million.
Yeah, I guess they still had a little bit of room to rise. They're, it's if people do want that more home feel, but they don't want to be cooped up in a high rise.
Yeah. Yeah, I think, I mean, when
Opportunities
we look
there.
at the supply and demand metrics, I think there's still quite a bit of demand for the supply that's out there. So I think if we address the supply issue, or if anybody that's watching this video wants to put some inventory on the market, please let me know, because we don't have a whole heck of a lot of it, and I'd love to sell it for you right now. So yeah, we're not seeing any shortage of the demand for these types of properties right now, which we'll go over in a second. And then it's kind of no surprise. I mean, the biggest kind of heavy hitter, these are the total sales numbers year over year, but the biggest one here is obviously condos. October 2020 was, pretty doom and gloom for the condo market in Toronto. Everybody was having this mass exodus of downtown. So to see that 33% growth in terms of sales, I'm not overly surprised. And then just to kind of show a different, version of this graph for year over year changes, condo townhouses, basically any segment of the market is over double digits in terms of growth. But if you were in detached row houses, which would be a freehold townhouse, or condo townhouses over the last year, you've done pretty well, in the 20s, which is pretty decent growth for an owner. So some other important metrics, months of inventory. I go through that every single month, and what this particular metric shows is the strength in the market, right? So as we continue to see this graph move to the left, it means that there's more strength for sellers, and as it moves to the right, it means that there's more strength for buyers. So if we look at the October numbers in comparison to the September numbers, what you'll see is every single one of these has moved slightly to the left, which means that there's less inventory on the market, and that there's more demand for each property that kind of comes on the market. So as we continue again to see that move to the left, we expect that prices will likely increase, and this is a good leading indicator as to what could potentially happen in the future months for pricing in our market.
This is crazy. I mean, I look at this and I go, like, if it continues to go more to the left, like, just to have a house on the market is going to be like you're auctioning off like Michael Jordan's sneakers from like his last NBA game or something. Like, it's going to be like so iconic.
Yeah, totally.
It's crazy. And it's a great metric to track, because if it is like too many months of inventory, that's typically there's a glut in the market. Things are gonna, like there is a bubble, or there's gonna be a crash, or overbuilding and all that stuff. We're definitely not having those kinds of issues right now.
Yeah, so normally if we see that number, just for any viewers, get over 4, right, which I'll show you another graph in a second here, but we haven't even come close to 4. We've barely come close to 2, to be honest. But if we see over 4 for months of inventory, that would be considered a balanced market. So between 4 and 6 months of inventory would be even playing field for sellers and for buyers out there. You're not going to see bidding wars and stuff. You'll have more traditional negotiations where each party can kind of add, some wants and needs into the contract. As we continue to see it go left, so right now you can see the bulk of these, with the exception of condo apartments for this month, are less than 1 month of inventory. That is an extreme seller's market. And the thing is that we think it's crazy, but this is happening, pretty much across the board for Southwestern Ontario right now. So the supply issue is a big issue. And again, as we continue to see that go more towards sellers, we expect that prices are going to increase. So this is just a different kind of look at it. The green here is condos, the black is freeholds. So you can see basically from September, which is when we were recording, like that was what we had recorded for last month, we're on this downward trajectory for both of these segments of the market. And the most important thing is to understand that we haven't in either of these segments touched 2. You don't see the number 2 on there at all. And so it's been a pretty hot year, and that's why we're continuing to see prices increase. But yeah, as we continue to see this move upwards, and you can expect that the prices might lax up a little bit here.
That's normal, right? I mean, obviously I would, I'm not a GTA realtor, but I'm sure the market always does take a little bit of a dip in December, maybe into November as well. Just as people are like, it's not a priority anymore. We're coming into Christmas, and we'll focus on Christmas, and we'll deal with this in the new year, right? But
yeah, and I think
definitely a very, very strong fall for sure.
No, totally. But I think there's this perception, and people always ask me like, hey, is the winter the best time to buy, right? It seems in theory that it would be, because nobody really wants to move in the winter, and what buyers want to go and put on their snow pants and go look for properties. Like, nobody's really interested in doing that. But the most important thing is to understand that there's two sides of the coin, right? So yes, there may be less competition out there from a buyer's perspective, but very few sellers also put their properties on the market. So we don't want to look at it just from one perspective. We need to look at it from a ratios perspective. So yes, there's less buyers, but there's also less listings. So is the ratio the same as it is in the fall? And what we'll see here is, we'll talk about pricing trends, but we'll also look at new listings in a second. And what we usually see is that ratio might even be tighter in the winter, because there are so, the listings are so few and far between when it comes to November and December, that the ratio actually might be higher buyer per listing, on a buyer per listing perspective. So the left side of this graph here is freeholds, the right side's condos. I've highlighted kind of where we are between September and November now. We obviously saw a little bit of an uptick here in terms of pricing, and we saw an uptick here in terms of pricing. Now, it's not uncommon to see from October to November, which is, the next video that we record, for prices to, potentially go down a little bit, to rise a little bit. It's a little bit hit or miss here. It's more common in the condo market to see from October to November prices to pull back a little bit. Now, what do I think is going to happen? I think we're probably going to see this be a little bit higher next month, and I wouldn't be surprised to see this just flatten out a little bit next month as opposed to pulling back. And here's why. If we look at the actual new listings trend, this dotted line here is the 10-year average, okay? We are very far behind the 10-year average for freehold listings. Yeah, we're not even close. We are extremely far behind. And so we're not seeing nearly as much new inventory hit the market as we typically do. And that's
that's like a 500, is that a 500 unit kind of gap right now?
Yeah, for sure. And I actually have the exact numbers in the next slide here for you guys. But if we look at that on a kind of percentage basis, we are way behind in comparison to other years. And then with condos, we're slightly above the 10-year average. So we're seeing a little bit more inventory hit the market than what we have over the last 10 years for this period of time, right? And so when I see those two things, we look at this just for face value, we're going to expect that freehold prices will probably increase a little bit more than condos, just given kind of what's coming to market, right? And so transaction volume by week as well, just so we have a better understanding of like how many sales are actually occurring. The green segment here is September, and then this is October. So we're actually seeing way more activity and transactions that are happening in October versus September. And this brings us, don't count this week because we're just starting this week, but we can start to see there's a little bit of a downward slope. So just a little bit interesting to see. And then from a year over year perspective, if we look back to 2019 and 2020, you'll see there's a ton of volume that happens in October. November gets slower, and then December and January are quite low in terms of actual trades that happen. It's the same thing. We go down, we kind of consolidate here in January, and then we start to see the bulk of the trades happen again in spring market. And we're seeing that same trajectory right now. Obviously, the November numbers haven't come out, but October we saw, quite a bit of movement. We're also seeing an upward trend. So again, September, October, this is where we are in November. This is over and under asking prices. And so we've seen that line move up for the last 3 months. And normally when we see more over asking properties, that means that prices are continuing to go up, or there may be more demand, more bidding wars, just a different type of marketing strategy. So if you're looking right now, it's just really important to understand that it's not uncommon for you to be in a bidding war, right? And yes, you just need to prepare yourself for that particular type of buying cycle. It doesn't necessarily mean there's anything wrong with it. It might just be the marketing strategy. The seller might just list really low and want to get multiple bids, but you need to be prepared for that because that's what's happening right now.
That'd be interesting if it's like upward pressure because, this trend with interest rates going up. People want to get in before that happens. Who knows, right? We don't know what's going to happen with interest rates. Are they going to do how many raises in 2022 versus 2023? But yeah, I could see this upward trend going for a while.
Yeah, I mean, if we look at these numbers, this is kind of, I think, probably one of the two most interesting slides of the entire presentation. It is across the board for the last 10 years. We've seen total number of new listings go down, right? September to October, it's just across the board. You're not going to see as much inventory. But the most important thing to look at are these two numbers here. So 11,740 versus 12,405, right? So we have the lowest number of new listings that has hit the market in Toronto in a decade. And it's not like by 0.5%, it's by 5% to the next closest, which was 2011. And 2011, the real estate market in Toronto was not even close to, the Toronto real estate market really started to, hit its stride kind of like 2014-ish, right? Yes. So it's really important to understand that in perspective. We are not seeing a lot of new inventory. Like, we need some homes to hit the market here. And then we look at this. So this is a supply metric. And then the right-hand side is the demand metric. This is how many sales are happening. And so we also had the second highest number of sales that we've seen in the decade. And the only one that actually outpaced this year was last year, which was obviously crazy because of COVID. We saw so many transactions. But just really important to understand, if we're looking at supply and demand, extreme demand, very, very, very low supply. It's very imbalanced right now.
Yeah, and for people that are maybe just looking to buy one, they may not grasp it, but for people that buy multiples per year, you've been at this for a while, like these really are like, there's never been a time in history like this before. So hopefully people can really understand, these numbers and how they're working for a seller, and they're a little more difficult for a buyer for sure.
Yeah, no, absolutely. I mean,
crazy. I love these numbers, or I love seeing the data, because you can make better informed decisions with the data and just understand, like, hey, I can't go into this fight with a cap gun. I need to go into this fight with a bazooka and every single thing at my disposal, including a great realtor like Emma, to really understand what is my strategy going into this offer. If this is the property that I want, what do we got to do to get it?
Yeah, no, and I think that's a really important point, Kory. And I think like one of the things that we do with our clients before we even see any properties is to conduct something called a strategy call, right? And what that does is that ensures that our clients are not entering a market that they're unprepared for and chasing their tails, so that we're setting the right expectation of, hey, in your particular segment of the market, right? Here I'm talking about the market as a whole. What we do for our clients is we break this down on a micro scale for their particular segment of the market, so that we can say, this is what's happening. This is how many properties in your segment of the market are going over under asking. And before you even go out to see any properties, given what's actually happening, you really should be doing that research and that education, so that it isn't as much of a disheartening process as a buyer, and that you're, yes, as a seller, if you look at this for face value, you just think, I might as well just put my property on the market. Anybody's going to buy it. And someone likely will buy it, but the difference of, could be $100,000 in today's market with marketing and all of that kind of stuff. You really need to be prepared when you go to market right now, because it could be a difference of $100,000 on kind of either side.
Big time. And how micro, just out of curiosity, how micro can you guys get with neighborhoods? Is it pretty tight?
Yeah, for sure. We can actually draw a specific map, right? So what I'll usually do with clients is just share my screen, and we'll draw the map out together, and then we'll add some filters in. And if we're not seeing enough data, then I say, look, these are all your wants and all of your needs. And unfortunately, there isn't enough data to substantiate me actually helping you do this. Like, if there's only been 3 data points in the last 60 days, it would be unfair of me to set the expectation that I think I could help you be successful, because 3 sales is not enough for us to make a full strategy on. And so let's start to remove some of these filters, or change the location or whatever. And so that's how we build the strategy for our clients. We don't build it off just a I think this is happening in the market. This is what has actually happened in the market in the last 60 or 90 days, because that's very relevant to today's market. I'm not looking at things from 2 years ago. And then we just build a strategy off that. And most of our clients find it very effective because they have the right expectations when entering the market. We're not changing things later.
Big time. And that's the trend that I see when I do these market updates with you and some of the other people that come onto the channel. Is just, this is what a great agent does, right? They really know the information. They make the strategy for you. And I call it that Midas touch, or that golden touch. It's like, let's market it, let's stage it, let's just do all these things so that you can get that, possible over asking, if you're in the mix. Yeah. And you're doing everything right.
And the reason why that's so important is because oftentimes the sellers that we're working with, they're going to be buyers as well. So we really do need to capitalize on, all of the gains that we could potentially get for our clients, because they're going from this amazing experience from being a seller to having to be a buyer thereafter. So we kind of need the money we can get, because it goes from, one extreme to the next for sure. So making sure that we set those right expectations and that we can squeeze out every dollar we possibly can for our sellers is really important to us, because at the end of the day, most of them are not cashing out of the market. I mean, our bread and butter are young professional millennials, right? So we need to make sure that we're helping them on both sides.
Big time.
Cool. So one final thing before we kind of move on to condos here is just sales to new listings ratio, right? And so we talked about months of inventory before. And if we've got less than 4 months of inventory, that would constitute as a seller's market. Sales to new listing ratio, typically, if we see north of 60%, that would constitute as a seller's market. So that means for every 10 properties that are hitting the market, 6 of them are selling, right? Right now, if you look for October 2021, we're at 83. You don't see another 8 anywhere else.
No.
Here. So there's extremely high demand. For every 10 properties that are hitting the market, 8.3 of them are selling. The next closest was 2016, where we saw 72%. So we're beating that by like over 10% right now. So to think that there's any equilibrium of supply and demand is not true at this point. Not true at this point in time. So just really important to see that the demand for what's going on right now is
that's a big jump from last month. Yeah, that's
there's
17% almost increase.
We haven't seen anything like this in the last decade. There's extreme demand out there right now. So condos, the good news is this is the market as a whole, and I think a lot of this is derived from the freehold market. Some good news for people who are potentially looking for condos is we've actually seen a little bit of a pullback. So I like to break the Toronto condo market down to 3 segments. And so for anybody that's familiar with Toronto condos, you'll know that the bulk of the trades do happen here because this is downtown, right? So we saw the total number of sales up by 6%. So we had just over 1,900 total sales that happened last month in the condo market. Now, if we look at Toronto West, you're going to see the bulk of the trades happen kind of down here and across the bluer line. Average price point to get in there right now, it was $665 last month. We're at about $650 right now. So if you're looking to stay somewhere in the West, you can expect that you're going to be in the mid 600 range for purchase price or final sale price. The Toronto Central, which is where we obviously see the bulk of the trades, there's over 1,300 sales that happen there. We're just shy of 800K. So last month we were about 806. We're at 797. So you can kind of expect if you're going to be downtown, you need a budget of about 800K to purchase a condo downtown right now. And then on the east side, which I would say is arguably the most affordable condo neighborhood, if you want to stay in condo dense neighborhoods, you're looking at Scarborough Town Center, that kind of thing. You're looking at an average purchase price of just shy of $570. So this would be a very entry-level price point for the condo market at this point in time. And this takes into consideration 1 bedrooms, 1 plus den, 2, all that kind of stuff.
Yes.
All right.
Yeah, not anything to be alarmed about, just because we've had a little, like we're talking like 1 to 2% here, right? So it's not like fire alarms are going off, like, oh my gosh, this is just, maybe there was less outliers, maybe there's less crazy over asking. type scenarios and things of just,
Yeah,
again,
even
there's
out a
a little bit more focus on those freehold or condo towns, right? So
totally. And I think the most important thing from this entire slide is just the average price, right? Because, $650 to $665 isn't a huge gap. We're talking, $15,000 in the grand scheme of over $500,000. Like it's very nominal. But it's really important just to understand what the average, the approximate average price point is if you're looking to either sell or get into the market. Anything that falls within this kind of blue category is going to be the most affordable. Anything that falls in this orange category is going to be the least affordable. And there's, quite a big gap there, $250K almost between here and here.
yes.
All right. Now, one thing that we are seeing, and we see this, year over year, is the days on market trend. So obviously, if we have a lower days on market, that means things are selling quicker. We start to see this trend upwards between October, November, and December. And then January and February, we usually see this slope down in kind of spring market. And so what this trend means is that it could be more comfortable buying process for purchasers out there. And that sellers need to understand, if it's taking you a little bit longer to sell your property, if it doesn't sell on the first day, it's okay, right? Like, it's still going to sell. It just might take you a little bit longer. So you need to have those right expectations. And we're seeing that already, is that this is trending upwards. So as a buyer, you may have a little bit more of a comfortable buying experience over the next couple months. You might have a little bit more time to make a decision, that kind of thing. And as a seller, you might need to wait a couple more days in the condo market for things to sell. But nonetheless, it's still a seller's market.
It'd be interesting. I mean, with all these stats, right? Like, we track like the over asking stat. It'd be interesting to track, because it's something that's really more become popular the past year or so, is just like how many, per given month, how many realtors are actually holding back offers, right? It'd be kind of interesting. Is the holding back offers trend like dipping a little bit? It's kind of hard to know. That's when they need someone like you, who's boots on the ground in the trenches.
Yeah, and that's one thing that we do in our strategy call is, if we narrow down the recent sales that have happened, we will try and go through, let's say there's 30 of them. We will go through with our clients, hey, 15 of these went over asking. So we understand that, we have to be prepared for both bidding wars and traditional types of offers. Or, hey, there's 20 sales and 19 of them went in bidding wars. You're going to end up in a bidding war. Like, it just is what it is, right? And my job as your agent is to inform you on how we can be successful with that type of strategy. Me feeding into your hopes and dreams or ego of like, I'm going to find you that one of 20, is just limiting your capabilities and limiting your choices in the marketplace. And it's unfair to set those wrong expectations with people. And so we just go through that. And if clients like it, they like it. And if they don't like it, then unfortunately we can't really help, because that's just kind of what's going on.
Yeah, they got to be ready to play the game.
Yeah, totally. So I think other than the supply and demand stuff that we talked about, the rental market update is actually another big one for Toronto, because we got hit pretty hard during COVID, right? There was that mass exodus. We saw rental prices drop significantly as a result of the pandemic. And so one thing that I track every single month is this particular segment of data, Kory. And so what I look at is any 1-bedroom plus den in the waterfront community downtown. So that's kind of over near Fort York, that has a balcony and parking, and it's over 500 square feet. And so that gives me a very particular segment of the market to track regularly. And so what we saw in September was the average rental price was $23.97, and it took around 11 days to put something under contract. In October, we saw that go up to $24.26. So we saw, not a drastic jump, but about $30 a month, and the days on market went up about 2. So it's taking slightly longer, 2 days extra. It's not really anything at all, to be honest, but we are seeing prices increase. Now, this is the most important slide for investors or renters in this entire presentation. And so I track this. This is why it's ugly, because I put this together myself. But what I do is so TREB only releases the rental prices quarterly. Okay, so every quarter I go in and update this, and you should look at these as so this is a bachelor segment, 1 bedroom, 2 bedroom, 3 bedroom. I track this every quarter as to whether or not the prices are going up. So just to give you an idea on my color scheme, like obviously we saw the prices drop, so I go red, prices drop, whatever. So we'll see this bolded area here was just before the pandemic, okay? And so what you'll see is the prices dropped for, what is that, 5 quarters in a row, right?
Yeah, big drops too.
Yeah.
I mean, I also coach students on how to, be great real estate investors, and it was challenging with some of my students that had condos in the GTA.
Yeah.
Like we were throwing everything in the kitchen sink at, just ideas to get their condos rented.
It was very difficult, right? People were offering incentives of a couple months for free and whatever it took to just fill that vacancy.
A lot of people were moving within the same building just because they're like, that guy rents it to me like $100 or $200 cheaper. So I'm just breaking my lease, try to come after me for it. But I'm, either that or you reduce my rent by a couple $100. Like,
yeah,
crazy.
No, and it was a very difficult time for investors. The light at the end of the tunnel is I track this, and you'll see these numbers at the bottom. This is where we are in comparison to pre-COVID, right? And so this last quarter was about just over 20%. Okay, this was about 16%. We were about 8 or something here, and we were about 5 or something here. In the last quarter, we have closed this gap so significantly. 3 bedrooms are actually ahead of pre-COVID. We've basically caught up with 2 bedrooms. We're about just shy of a 1.5% behind. So I think if we continue on the same trajectory that we've seen, I would not be surprised that at the end of maybe this year, maybe the end of Q1 2022, that we see the gaps closed for rentals. So I think there is a little bit of light at the end of the tunnel, or some good news on the horizon here for investors, that we are less than 3% for vacancy right now. We've pretty much caught back up for rental prices. We're getting close there too. And so it's not all doom and gloom in the rental market in Toronto anymore. We're getting back to kind of where we were. 2 bedrooms and 3 bedrooms have performed the best. I try to steer most people away from bachelors. As you can see, they got hit the hardest. But I think the 1 bedroom, 2 bedroom, 3 bedroom segment we're definitely getting closer to the top again.
Yeah, and then it's great that you're tracking this stat. Tell me of other realtors that are taking the time to make their own spreadsheets and track things like this. It's super important. I'm a numbers cruncher and geek too. I track all kinds of things in spreadsheets, and it's interesting, that the bigger units here are doing well, right? So I make up, hey, maybe people are just selling their homes and saying, you know what, I'm cashing out. I'm gonna go rent for a while. We're gonna see what happens in the next couple of years, or maybe we'll just go move to a more affordable city. A lot of people are just kind of like keeping their options open. And I've also heard that sometimes people might want to be a renter in a high rise just for more community. They actually get to see some people once in a while, or be around other people, actually have a close neighbor, all those different things that you can rely on early on.
Yeah, I think one of the things with the 3 bedrooms is they're actually very hard. It's very hard to come by a 3 bedroom condo in Toronto. And so if somebody wants to live in a condo with a family, they typically do need that den, or they need that 3rd bedroom if they've got a couple kids or whatever. So the lack of supply and the demand there is what has probably led to, that being the best performing segment of the rental market. Is just there's not a whole heck of a lot. And then, with the 2 bedrooms, you have a little bit more variety in terms of who you could rent to. You can rent to, couples and they need an office space or a guest space. You could rent to 2 individual parties who are friends. Like, you just have a couple more options with what you can do there. And people are just craving more space. They're maybe willing to go a little bit further to get more space, especially as people are working from home. So I think that serves, those 2 segments of the market. And, bachelors, it's pretty tough to work from home and live all in one space. So I'm not surprised to see that there.
Big time.
And then this is just another kind of visual that I put together of just kind of where we are. So you can see, we're above here, we're just behind. And then here there's still a little bit of a gap to close, but in comparison to where we even were last quarter, we've closed that gap quite a bit.
Yeah, we haven't even come close to turning on the immigration tap. So it's great that there's been a recovery, and as there's going to be more people coming in, that'll hopefully help in any investors that do have condos for rent. You'll be on the right side of supply and demand then.
Totally. And then just kind of the last thing that I always like to go over is just kind of classic real estate questions. And so it's how do you win in the new year, right? Because I think a lot of people that are going to be watching this video that maybe have some motivation to move next year, it's really important to like set those expectations now. Because if you ask me in the new year, you're already too late, to be honest, right? So for buyers, it's get your finances in order now. If there's one thing that you can do by the end of the year, you don't even look for houses. Don't even look for houses. Just get your finances in order. Get pre-approved. Get a better idea of what's going on. Because as soon as second week of January comes around, you're just going to be in the big pileup of everybody else that is a New Year's resolution buyer that calls up the mortgage brokers and says, hey, can you get me pre-approved, right? And there's not going to be any urgency on your file. Right now, they want to get everything wrapped up by the end of the year, so they can go on holiday break there. So if there's one thing that I can recommend, it's just get your finances in order. And then use the first 2 weeks of January as an education launchpad. There's not going to be a whole heck of a lot of inventory for you to see. So use those 2 weeks to have a strategy call with an agent and go over what are the expectations. How can I get ahead of the spring market and start actively searching before the spring market. Understand exactly what it is that you're going to purchase before it pops up, right? Do a little bit of legwork so that when the right thing pops up in the spring market, you're buying it early. You're not buying it after prices have continued to increase and more bidding wars and stuff like that. So I would say most people are going to start on January 5th to January 15th. You should start just get the ball rolling now. You don't have to do everything, but start a little bit ahead of everybody else, and it'll prove to be very effective for you. And then sellers, conduct your property walkthrough before the end of the year. If you're thinking about selling for spring market, like honestly, have an agent come through your property before the end of the year and tell you what you need to get done, because vendors get very busy at the beginning of the year. Painters, photographers, everybody gets booked up, and you're going to stand there going, why does nobody have any urgency? It's not that they don't have any urgency. They're booked for the spring market. So understand what needs to be done and pre-book your vendors so that you have priority and that you can hit the market when you want to. And then one last thing is COVID has scared off a lot of buyers who lack renovation experience because of the supply chain issues, contractor costs, all that kind of stuff. So the more turnkey you can make your property, the more buyers you will likely have. The properties that are unrenovated right now, especially in Toronto, are the ones that are sitting around longer because people are more scared than ever to do any types of renovations. They're not even sure if they can get painters right now. So do whatever you can to make your property as turnkey as possible, and it'll likely prove to be a positive experience for you.
Big time. And I see definitely some trends here on this slide, Emma. Like, work on the relationships, and don't just do things last minute. Like, I think as a society, we're conditioned that with Google, I could just push the button on my phone and say, Siri, how many days are left in the month or left in 2021, right? And just get an instant answer. People want an instant answer, but they don't realize how busy anybody that touches real estate is right now. It is no joke. And I know for me, anytime, and being really clear on what you want. Anytime I've ever bought a bigger purchase like a house or a car, it sounds silly. Emma might be able to relate because she's a spreadsheet person, but I've literally made a spreadsheet of pros and cons, or giving things a weighting, right? So I'm willing to pay more if the house has this or whatever. It's this is my score, or give your properties that you went and saw a score, right? And then also obviously talk to your heart. Is this something that we could actually have a family here? All those sorts of things. But, and there might be some opportunities for people that are a little bit more handy if you're willing to, take that, not really a risk, but are you willing to go through some of the bumps waiting for supply chain issues? And if you're handy, maybe you could actually go and get some built-in equity.
Totally. Yeah. If you can take something off a buyer's plate right now, more buyers are going to, like, first of all, there's not too many of you out there. And if you can take a lot of stuff off of their plate that they don't have to deal with, the painting, flooring, staging, obviously I'm a huge proponent of staging. I very rarely put anything up that isn't staged, but the easier that you can make it for buyers right now, the more profitable it will likely be when you go to market. But for buyers, like, honestly, just get your ducks in a row. I know it sucks. Like, trust me, I hate doing the financing. I hate getting my paperwork together. It's the worst part of the whole thing, but you can't do this without doing that part first. So, do all the hard work and then enjoy the fun part of it in the new year, right? So if there's one thing that you can do by the end of the year, it's not even searching for properties. Just get your ducks in a row and you'll thank yourself come January 15th.
Big time. Awesome advice.
That's all I got for you guys. So thanks, Kory. I appreciate you being on here with me today.
No worries. Any interesting stories from the trenches? Just like, clients that have done well on a buy or on a sell, or just crazy over asking, or just
most of our clients. So like I said, the bulk of our client base right now, especially for myself, I've been focusing a lot on building my business. So we've grown the team and all of that kind of stuff. And I've been really focusing on that over the last couple months. But my bread and butter kind of clientele base would be young professionals who maybe have their first condo that are looking to upsize to freehold properties, right? Like that's the bulk of clients that we're working with right now. And so I think a lot of our clients we're very adamant that they're patient, right? We're not pushy salespeople when it comes to our clients. We really do want to make sure, like, if you're moving out of your condo, you're moving out of there for a reason. Like, you need more space, and I don't want to just push you into another house that, great for me if you call me in 2 or 3 years, but kind of selfish if I did that. So we make our clients be very patient with their purchases. And we just had some clients, it took them it was a longer sales cycle than they would have liked it to be out in kind of Durham region. But both of our clients that purchased out there recently, we got them $100K under the top of their budget. They didn't end up actually going to top of budget. And we ended up getting them slightly north of what we felt was market value on their property. So I think it's really important that you work with somebody that doesn't make you feel pressured, because slow and steady sometimes is the best approach, right? Finding the right deal is the best thing for you, and making sure that you find especially for our clients, like, find the property that's going to make you happy. There's no point of you calling me in 2 years again saying I'm unhappy and having all of the costs of the transaction, because, like, it's super expensive to move. So sometimes it makes a little bit more sense if you spend another $25K on the property now to get the extra room. It's probably cheaper than calling me in 2 or 3 years and moving again. So we need to talk.
Plus, maybe you might have some mortgage breaking fees. You're going to have to be paying the double land transfer tax again. That's something you typically, if it's a end user buyer, you can't write that off. It has, it's just sunk costs, right? So
totally,
it is very important to be patient in any market.
Slow and steady wins the race right now. I would say slow and steady wins the race until mid-February, and then there's some urgency and then it slows down again in the summer. So I wish anybody that's out there the best of luck right now. If you're a seller, you're probably doing pretty good. Buyers, put on your big boy and big girl pants, and you'll make it happen, I promise.
Right on. Well, thanks so much for the information there, Emma. And this is how you can stay in touch with Emma. I've known Emma for quite a few years now, and glad that I do have an ally in the GTA, and you should have her as an ally as well. Especially someone that's this knowledgeable on the market. And I got to tell you, like, if you have to actually teach something and go through all these spreadsheets and numbers, you got to know that she knows her stuff inside and out. So blessed to have you as a friend. And again, everybody, make sure that you're moving forward smartly when it comes to real estate. You got to know the right people and make those relationships and be prepared for the new year, like Emma was saying.
Well, thanks, Kory. I appreciate it.
No problem, everybody. Have an awesome day.